Welcome to Drill Down Earnings. We have quarterly results out from Ciena, and we look at the 50 most important companies in technology here on the Drill Down Earnings podcast. I'm Cory Johnson, Chief Market Strategist of Epistrophy Capital Research, and this is a new addition to our 50 most important companies. It's not a new company. It's a company I looked a lot at back in the .com era, because I'm old. But this is a really important company right now, and I think it's a really interesting one. And this conference call was about the most bullish conference call I've ever seen from a normal CEO in my entire life. So the comments you're going to hear from the CEO will be jaw-dropping, but let's give you some context. So Ciena is in the business of making networking equipment, and most of their business for years has been selling into the telecom sector, principally around optical communications using photonics and lasers to allow for long-distance telecommunication. But those technologies are really interesting right now in the data center, connecting data centers both in small distances in data centers, a little bit further distances in data centers. Small distances, kind of amazing that they want to use lasers for that, but also starting to connect data centers to each other. And Ciena's got a lot to say about what's happening there. That helped them deliver a great quarter here, beating estimates with $1.35 billion in revenues and 13 cents in GAAP earnings per share. Non-GAAP was a lot better. I don't like to talk about non-GAAP a lot, but I'm going to do it here today because these results were just fantastic. So AI is driving revenue growth at this telecom equipment manufacturer that has been through some rough times. You can see even a year ago or so, revenues were declining on a year-over-year basis about a year and a half ago. They've had two rounds of kind of restructuring in the last, to call it 3 or 4 years, including a really big charge this quarter. We'll talk about the non-GAAP number. If you take out the restructuring charge, it was an amazing quarter they just delivered. But look, strong financial execution in this quarter alone. 20% year-over-year growth, a little bit less than last quarter, but they're just getting started on that. Adjusted operating margins of 13.2%. Free cash flow of $326 million in the quarter. They raised their guidance in the quarter. Now their operating margins are getting better. They're focusing on this optical sector for the data center, and it's yielding some nice pricing, which means some nice results. They're also holding back on operating expenses, even as revenues are growing here. The result was a 9% margin. Well, not really. If you take out that charge, if you put in the charge that they took for restructuring, which is a real cost, the margin is only 1%. But I think it's important here to look at this the way Wall Street looks at this, which is to say, when you take out the restructuring charge, this is what's going on with the business going forward, and the margins are getting better. Now, what do they sell? So services, important to any company. They're helping their customers make the stuff work. But from the smallest businesses they have, their Blue Planet automation, who cares, 2% of their business. Platform sales and services, mildly interesting, but routing and switching, 9% of revenues. And optical networking is, now over 2/3 of the business, 68% of revenues. And then what they said in the quarter is that that's just getting started because AI-driven cloud demand accelerated in the quarter. Their business is just growing fantastically. This optical networking business, they're reconfigurable line systems. Don't say that if you've been drinking, because everyone's going to know. But I've not. I can say reconfigurable line systems. That business up 72% on a year-over-year business. Hyperscale investments in long haul and data center interconnect for AI workloads has been just fantastic in the quarter, and a lot of conversation in the conference call about how the AI business is growing even faster than the AI companies expected them to. We're going to hear more about that in a moment here. But specifically within that, the coherent pluggables hitting new highs. Those are the devices that allow you to connect one server rack to the next. Devices that plug in kind of the size of a Snickers bar that plug into the back of these data center modules carrying optical componentry, laser systems, moving data through those lasers once those things are plugged in. Those things are going great. Second consecutive record quarter for these guys with the pluggables, both in terms of shipment and revenue. Their WaveLogic 6E, which is a 1.6 terabyte product. That's the fastest out there in the industry. They're deploying them in 12 new customers in the quarter. That's amazing, because a lot of companies are just focusing on this for years, have yet to ship any 1.6 terabyte product. These guys are already expanding that business quite a bit. And their routing and switching business, not nothing, $120 million in a quarter, 49% on a year-over-year basis. So, and that's, again, driven by AI cloud demand. So a really powerful quarter for these guys and their biggest businesses. Wall Street loved these numbers. The stock was up by the end of the day. They report in the morning. Stock up 9% by the end of the day. Just fantastic quarter for these guys. And indeed, for the year, this stock is up 231% which sounds like good news unless you're like me and you looked at it 9 months ago and didn't buy it. That's why I don't give stock advice, because I would have missed it. I wouldn't have given you this wonderful company here, but we're going to start looking at this thing now, because what they said during the quarter is that things are just getting better. Now, I rarely use quotes from a CEO during their prepared comments, mainly because these guys, they just sound lame when they read things. Gary Smith's got a great voice, CEO of Ciena for a very long time. He's been the CEO there, the Maryland-based company, I should mention. Gary Smith talking about what they see from these AI customers, from the hyperscalers they've got, let alone the hyperscales they expect to get. But this accelerating their demand they're seeing from their cloud customers, and including the large hyperscalers, is a sight to behold, says the CEO of Ciena.
Firstly, we continue to see accelerating demand from our cloud customer providers. And that includes the large hyperscalers and the emerging neoscaler segment that we talked with you about last quarter. In fact, cloud providers today are as focused on scaling their network as they are on their access to power. Orders from cloud providers are very strong and ramping across our portfolio, and they constitute a substantial portion of our growing backlog. It's important to note that this accelerating demand is being driven by several dynamics. And as counterintuitive as it may seem, the cloud providers have largely actually underinvested in their networks to date, particularly relative to other areas of AI infrastructure. The major hyperscalers, who are seeing rapid traffic growth, not only have the capital to invest, but also have real, sustainable business models that are currently constrained by the need to dramatically scale their global networks. These cloud providers cannot and do not intend to strand their significant investments in AI-related data center infrastructure. And I would stress that traffic needs to leave the data center to be monetized and operationalized.
So think about what he just said here. That lots of other companies are talking about moving data within data centers and data centers getting bigger and scaling out to bigger and bigger data centers. He's talking about a business here where traffic is going to leave the data center to go to another data center, or leave the data center in massive volume and at massive speeds to get to their end customers. That's going to be a huge business for Ciena. I expect it'll be a huge business for Corning, which is making those fiber optics. It's a company stock that I own. I don't give stock advice again, as I mentioned, but I'm looking at things that are going on in this sector because I see it from all the companies I talk to. And it's really amazing to see how AI build out is really growing. And frankly, it's also amazing to see right now at a moment when, some companies are getting beat up for their AI spend and their rising CapEx. Ciena is not. The stock is on fire. It was an amazing quarter from this company. But I give you a lot of information here. What's it all mean? What's your big drill down earnings takeaway? And what's the one number that tells you a whole lot? Well, first, subscribe to this feed. Follow us. Click on the button there. So we know that you're there. So YouTube or Spotify or iTunes or whatever knows that you're there. By subscribing to this, it lets us provide more of these recordings, podcast videos, so we can give you more of this information that I think you might be finding useful. But let's summarize here. So Q4 earnings, fiscal Q4 earnings from Ciena, one of the 50 most important companies in technology, a new one for us. I think one that's really important here. Your essential summary, your drill down earnings takeaway says $1.35 billion in revenues, 20% growth on a year-over-year basis, and such a bullish conference call. Oh my goodness, I've almost never heard a CEO so bullish about what's going on at their company, saying that even the AI data center companies are surprised at how much they're spending on optical networking, and it's growing faster than anyone expected right here. And I think the number to look at here is the optical networking business, the biggest number at Ciena. $929,200,000 in the quarter in sales in optical networking gear. And they say they're just getting started, raising guidance, saying the numbers are going to get a lot bigger in the near future, raising capital expenditures. Think about that. When Oracle's getting beat up for saying they beat the quarter, raising their guidance and spending a lot in CapEx, Ciena, the market's rewarding Ciena for the same thing. Beating numbers, raising guidance, raising CapEx spending, optical networking and data centers is hot. You want to check out Ciena, interesting company, or not stock advice, but an interesting technology that's growing within the data center world. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. Follow me on X at Cory TV, and of course on TikTok, Instagram, YouTube, Spotify, iTunes at Drill Down Pod.